for everyone. And yeah, thanks again for joining us today. My name is Emmanuel Davila. I serve as Director of Business Growth Services here at the Southland Development Authority. I have the pleasure of leading a team of relationship managers that advise entrepreneurs and connect them with resources, and also help educate them and provide educational resources like what you're seeing today. We also have a fabulous team from Michelle Ringold Financial here to go ahead and share more insights on the accounting practices that you're here to learn about today. And we'll be covering briefly the eligibility requirements to participate in this year's 2024 Tax Pro Assistance Program. So a little bit about the Southland Development Authority. If you do not know what we do, we're an economic development agency that was founded to support economic growth in the south suburbs of Chicago and Cook County as well. And our team, the Business Growth Services team, works one-on-one with small business owners like yourself through various programs, including like this here, the Tax Pro Assistance Program. We also provide one-on-one mentoring or tailored expert consulting. We work with the communities and the municipalities in the south suburbs to go ahead and build networks so that entrepreneurs can tap into those networks. And we also provide educational opportunities like webinars, training programs, and cohort learning opportunities as well. We do have a survey. It takes just a couple of minutes to fill out. If you can take a snapshot of this QR code, it helps us know what kind of programming you want to see come from our team and what kind of services you're looking for, so that we can go ahead and put our resources to use to bring those services to you. And I'll go ahead and turn it over to Maricela, who'll share a little bit about the eligibility requirements.
Yes, thank you, Manny. Good afternoon, everyone. I'm Maricela Zambrano, a relationship manager here at SDA, and I am pleased and excited to introduce to you our new tax preparation program. So once again, the SDA has partnered with the esteemed Ringold Financial Management Services team, which they are an Illinois licensed CPA and management advisory firm, to serve you this tax season. This collaboration brings you the opportunity to work with the team that both the SDA and Cook County trust and rely on for their exceptional expertise in the field. So thanks to our partnership with Ringold Financial, we are able to offer you services that are valued at approximately $2,000 at a heavily discounted rate. With this program, you can qualify to have your business tax returns prepared for just $350, or opt for both financial statements and tax returns prepared for only $500. So this program, it has availability for up to 35 qualified applicants. And if you're interested in participating, you must submit an application. So please do so by scanning the QR code that's displayed on your screen. And we will present this QR code again at the end of the presentation. So moving on to the eligibility criteria. To be eligible to apply, you must meet the criteria that is displayed on the screen. So you must have an active business in Cook County. You must have been negatively impacted by COVID-19. Your business must not be engaged in any illegal activity, nor yourself. Your fiscal year revenue must be at or below $500,000. And you must have an active EIN. You also have to have your prior tax returns if it's not your first year in business. And you need to have your financial statements, such as your profit and loss and your balance sheet. And you should also be current on your income and payroll tax liabilities and not under an IRS audit. So additionally, as a disclaimer, please note that the Ringold Financial team will prepare the returns based on the information that you provide to them. It would also be your responsibility to provide all the information required for the preparation of complete and accurate tax returns. So without further ado, I will now hand this over to the Ringold team.
Michelle, you're on mute. Are you guys able to hear me now?
Yes.
Okay, wonderful. Good afternoon, and thank you for attending. And also, I'd like to really thank the Southland Development because platforms like this really helps small businesses that take advantage of them. And it really is a resource, as indicated previously, that costs several thousands of dollars. And it's a way where organizations can get quality services and be supported by organizations like the Southland Development. So thank you so much for having us. Are we going to be driving a slide, or the slide presentation went away?
Yeah, you can share your screen now.
It was my understanding that you guys are going to be driving, but Olga, if you want to go ahead and drive, you can. Are you able to take yourself off from mute, Olga?
Yes, I'm pulling it up now.
Okay. Okay, thank you. All right, so a little bit about Ringold, as mentioned earlier. I'm Michelle Ringold. I'm the managing partner of Ringold. We also have Lily Bartkoske on the call, who is the managing one of the partners for our audit and tax practice. We are a licensed CPA firm. We have an office downtown, and then we have one in Tinley Park. And we really focus on not only providing audit and accounting services, but understanding the tax laws and compliance, not only helping you prepare the tax returns, but really being able to help you analyze your taxes and plan and efforts to help you mitigate tax liability. Next slide. Can we just put it in the regular view, please? While she's doing that, if we can't do that, a little bit, I don't know if she has rights, guys, to adjust this at all, but if we could, if not, that's fine. Typically the presenter or the person that's hosting it is usually
Yeah,
control.
Olga's the co-host, so she should be able to pull this up.
Okay. Well, I'm Michelle Ringold, and as I indicated, I am a licensed CPA. We have a lot of experience providing supportive services to small business. Not only do we help with tax services for the Southland Development under this contract, but we also have a supportive service contract with IDOT, where we service thousands of DBEs and helping them with financial statement preparation, tax returns. We also have a strong relationship with the city of Chicago and have a strong experience record of providing MBE and WBE supportive services on that platform, as well as working with Cook County. So you are talking to a firm that not only have the experience of working with small businesses, we also work with many government agencies and efforts to support similar services. Lily Bartkoske, who is one of our partners, heads up our auditing and tax practice. Once we turn the presentation over to her, she can go into detail about her experience, but you're in for a treat because Lily is very versed on the tax rules and regulations. And I think the information that she's going to be sharing with you guys today, you will find very useful and helpful in efforts to help us have a successful tax year. Next slide. The presentation objective today is at the end of this training session, the goal that we're trying to achieve is to ensure that participants have a better understanding of, number one, the importance of maintaining accurate accounting and financial statements, because that's critical in efforts to get the financial statements prepared. And then you also will have an understanding of the documents that's required to get your tax returns done. So we want you to walk away from understanding exactly what's needed to get the tax returns prepared. And if you have any questions as we're going through the information, please put those questions in chat, or you can email us. SDA will cover one 2023 business tax return, as well as financial statements preparation. And as indicated, they have went over the fees for that. It's $350. I believe that has to be paid directly to SDA prior to actually being approved for us to move forward with the services. So I just want to, remind everyone that that is a requirement. And we want to encourage you guys, if you're interested in taking advantage of the services, to do this right away. As you know, tax due dates are approaching soon. March 15th is the LLC dates, and then the C Corps, LLCs and S Corps. So we'll have to file an extension. And then March 15th is the corporations and individuals. So I encourage you guys to, go online and apply as quickly as possible so that we can start on your tax returns, and if needed, file an extension so that you don't get hit with late filing penalties. Next slide. So real quick, just talking about the financial statements and the importance of accurate financial statements. I mean, financial statements of a business provides a formal record of its financial activities. And as a business owner, your financial statements offer valuable information about your organization. It tells you what your overall financial position is, the financial strengths, whether your ability to pay off debt. It's important to have accurate financial statements because that information is what feeds into your tax return and efforts to produce accurate and timely filing of your tax returns. And at the end of the day, it really gives investors, bonding companies, as well as tax preparers, an overall ideal of where your company is as it relates to profitability and performance measurements. Next slide. A lot of times you engage a licensed CPA firm, and I want to point out that there is something called a certified public accountant that's not licensed. And then you have a licensed CPA. And the difference is the certified public accountant, they've passed the test, and in order to get licensed, there's other criteria as it relates to experience and track record in order to get licensed as a CPA. But I bring this up because a lot of folks do not understand that if you have your taxes prepared by anybody other than a licensed CPA or a licensed attorney or an enrolled agent, those are the only type of individuals that can represent you in the event of communicating with the IRS or if there's an audit. So it's real important to understand, there is a difference between a certified public accountant and a licensed CPA. Licensed CPAs I'm sorry, let me just put this on mute real quick. Sorry. So sorry about that. Note to myself, mute my house phone. But CPAs provide reasonable assurance of financial reporting to ensure that, they are free from material misstatements and that they're in accordance with generally accepted accounting principles, which is the acronym is GAAP, and those are the standards that CPAs follow. We also help set up accounting information systems to help you manage and secure financial information, to help you perform analysis on your operations. But also, it's important that your financial statements and you have someone that's helping you prepare your financial statements properly, because that's what's ultimately going to be going into your tax return. We can help you with strategically planning for taxes and minimizing tax liability. Next slide. CPAs really, if you engage a CPA, and I think it's really important and great that the Southland development is allowing or paying a partial service for this, because CPA services can be expensive. But if you have a program like this where you're able to get a reputable CPA that really can help you not only set up your systems properly, but to help you meet your company's objectives. We understand GAAP, we understand what banks are looking for, and most importantly, setting up your financial statements and tracking your transactions and electing certain deductions and credits as it relates to tax returns is critical and is very important. if you're able to engage a CPA that understands your industry. If you're in the construction industry, there's different laws and rules for construction versus maybe professional services. So it's important that you engage a CPA that understands your business and that can help you meet your objectives. Next slide. Setting up your accounting systems is very important. From the parameters, whether you're using QuickBooks or any other software, making sure that your parameters are set up. And technically, the parameters is the brain of the system and how things are going to be recorded in your financial tracking system. And construction may be different and have different requirements for it from a trucking firm or a professional service firm or a retail firm. So having and engaging someone that can help you set up those parameters so that when you're putting in transactions, they're tracking properly is very important. Helping you maintain a chart of accounts. Understanding, the difference between an asset versus a liability. On your profit and loss side, segregating those costs that are directly related to your sales versus your G&A costs is very important. Helping you set up depreciation schedules from a book perspective versus a tax perspective. And just making sure that you've configured your accounting system in a way that can get you information timely and accurately. We all know that information is very important, but the information has to be accurate and it has to be timely, so it puts you in a proactive state versus a reactive state. So I can't stress how important it is to keep your books up to date and put your transactions in. And look, hey, they're going to help you pay for those services by a licensed CPA firm that even if you have a current system, maybe we can take a look at it and help you enhance it in efforts to maximize your tax savings. Next slide. Understanding your financial statements. So accrual-based financial statements, I'm going to read the technical here on the screen, but I'm going to also put it in simplistic terms for you. So an accrual-based financial statements is the method of accounting when economics, activities, or financial events are considered. Determines at which point expenses and revenues are recognized according to the revenue recognition principle. Incurred expenses are matched to related revenue under the matching principles, and it is required by U.S. GAAP, which is generally accepted accounting principles. So in very simplistic terms, if my financials are on an accrual basis, which is best practices, and most banks do want to see them on an accrual basis, smaller companies can get away with a cash-based financial statement. But basically, an accrual-based financial statement, if you don't take away anything else from this, is that when I perform the services or deliver the product, I'm recognizing that revenue in my financial statement at that time as a sale. And then the flip side of that is for expenses. When the expenses are incurred, not when I pay them, but when they're incurred, I'm recognizing them at the time that they're incurred. That is the biggest thing that you need to remember about accrual. It's not when I collect the sales, it's when I actually have rendered it. So if I'm a consultant like a CPA firm and you engage me to do your audit, and I do work for the month of February, and I bill you $10,000, you may not pay me for 30 or 60 days, but that's going to be represented in my financial statements in the month of January. And if I have costs that's associated with that, whether I'm using sub-consultants or payroll for the services that they provided, whether I've paid them or not, that will be incurred at the time that the expense is incurred. Next slide.
Real quick, Michelle, Olga,
Sure.
if you click on display settings up top, and I think if you click swap, you should be able, right next to show taskbar, the display settings. You have a little drop-down menu there. And then I believe if you click that swap presenter view. There you go.
Yeah, thank you.
Thank you.
Thank you. Yeah, we don't use Zoom a lot, so thank you so much. All right, so then the next method is your cash method. A lot of small businesses will use cash method. The cash method of accounting is based on the cash flow of financial events, recognizes revenue when cash is received, and expenses when cash is paid out. Does not recognize a promise to pay a bill, which is, we call that accounts payable, and that's the acronym AP, or expectations of cash receipts, someone owing me, a customer owing me. The acronym is AR, which stands for accounts receivable. The cash method is not considered GAAP, but many small entities run their books on a cash basis. I mean, if they're in retail, they may not have accounts, so it's all cash. So if you're going to take away just in simplistic terms, I'm recognizing the sales or the product of my service at the time that I collect the money. On the expense side, I'm recognizing those expenses at the time that I pay it out. Depending on your industry, that could be a little disadvantage, right? I am a CPA firm, so I do a lot of accounts, where I'm doing the services and I'm paid later. So if I get to the end of the year, let's just say December 31st, 2024, and my cash sales may be 3.5 million, but I got another $1 million sitting in AR of work that I performed. I don't want to show year-end financial statements at 3.5. I want to show year-end financial statements at the 4.5. Don't get confused with cash basis for financial statement purposes versus tax basis. On the tax side of things, I am on a cash basis. But the beauty of that is, from a financial standpoint, when I'm presenting my financial statements to the bank, I'm showing $4.5 million worth of receipts, of which $3 million was paid in cash and $1.5 million is owed to me. But the volume is 4.5 versus 3 million. Now, on the tax side, I may be on a cash basis, so I only have to pick up the 3 million that's actually collected. So I just want to make sure that we understand the difference. We're really talking about best practices for the financial statements. And then if you're on a cash basis, from a tax perspective, those financial statements can be converted to maximize tax savings. Next slide. So, the different types of corporate financial statements. So when we start working with your organization, we're going to need the income statement, which is sometimes referred to as your profit and loss and your statement of income retained earnings. This is the statement that basically takes all your sales or income from your clients, as well as your expenses, and it itemizes it so that we can move it into your tax return. If you are over a certain threshold, we like to have a balance sheet. The balance sheet shows all of your assets, your liabilities, and your equity. We'll go over both financial statements so you can see them. Although not required, we are talking about financial statement assistance, and best practices is to have a cash flow statement as well. A cash flow statement is the financial report that shows your incoming cash flows as well as your outgoing cash flows, and it helps you identify your ability to meet short-term and long-term obligations. Personal financial statements, we can assist with that. And putting that together, although this is outside of the scope of what SDA is presenting, but I just want to make sure that you understand the difference between a business financial statement and a personal financial statement. And really, a personal financial statement is just taking all of your personal assets and subtracting it from your liabilities and giving your net worth. If you're a larger firm and you're doing project costing is important. If you're under a certain industry like construction, we can take different revenue recognitions on your tax return. So that's for your more complex clients. And then your accounts receivable, accounts payable, that kind of information. A lot of times we'll ask for it. If there's an opportunity to subtract that out for tax purposes, we will do that to help lower your tax liability. And then we have different levels of financial statements that CPAs perform. One being the compilation, which is the lowest level. These are really just your financial statements, and we're just ensuring that they're in compliance with GAAP, meaning that assets are reflected in the proper categories, liabilities are reflected in the proper categories, and so forth. A review is the second level. And just to give you a price point of understanding, because I know a lot of times lenders and banks will ask for audited financial statement, they use it very loosely. Our organization can charge anywhere from, I would say, $2,500 to $5,000 for a compilation. A review typically will start at $7,000 and go up to about $12,500, and then our audits start at $12,500. And I only mention that to say that a lot of times banks and even certifying agencies are asked for an audited financial statement, but you really need to understand if it's really a compilation that will satisfy the requirement. So just understanding the different level of financial statements is, I thought would be helpful to include. Next slide. Then we have, a couple examples of how your financial statements should look. This is a balance sheet, just giving you a couple examples of what's presented in your current asset section, which you can see you have cash, you have accounts receivable. So, these are things, and the definition of current assets is anything that's really liquid within, that 12-month period of your financial statements really should be reported under the current assets. Then we have our fixed assets, which are things like your computers, equipment, and things like that, instead of expensing it directly to your profit and loss statement, you want to capitalize it. Quick example, I buy a vehicle and the vehicle costs $60,000. I buy it January of 2019. I don't want to hit my profit and loss with the full $60,000. So I set it up as a fixed asset here, and under the best practices, let's just say the vehicle is amortized over 5 years. What that means then, instead of hitting my profit and loss with $60,000, I hit my profit and loss for the first year of whatever that amount is, $12,000 to get, to amortize it instead of hitting it over at one time. That is book best practices. From a tax perspective, if I'm a small business, I can claim special depreciation bonuses, special Section 179 to take the deduction on my tax return, but understanding that I want to strategically plot out the fixed assets on my balance sheet in efforts to show the best light from a financial perspective is very important. You also have your liabilities, which are, same thing. Current liabilities are, within a 12-month, whereas long-term are longer than 12-month periods. So we segregate that. So then in this example, you have total assets of $5.1 million in 2019, and you have total liabilities of 3.265. And then your equity, really from a book standpoint, is if everything liquidated based on the book value today, this particular company as of 2019 would have a value or a book value of $1,834,000. So the balance sheet really is the life of your organization, and it can tell you where you're at. Whereas the next statement, which is the profit and loss or income statement, that's a snapshot of a particular time, typically 12 months. So I can have a bad year, but if I have equity of 1.8 million, and maybe I lost 200,000 in 1 year, I still have a strong balance sheet. So I'll pause. I don't know if there's any questions in chat. And then if not, we will move to the next statement.
There's no questions now.
All right. Let's go to the income statement. Okay. And then this is just a quick example of an income statement, understanding, your sales or your revenue, segregating your costs of sales or cost of goods. And what these are costs that are directly related to your sales or revenue. Okay, so this is an example of probably a contractor or a construction firm. So what do it take for them to deliver their services? They need their direct labor. They may use subcontractors. They may use material, equipment. So those costs that are typically related to the generation of your sales. If you're professional services, you probably have consultant labor, wages. You may even have travel that's directly related to the sales of your business. It's important not to lump all of your expenses together, because as a business owner, you need to understand what your break-even analysis is. And these costs of sales or cost of goods sales, cost of goods costs, they are directly related to your sales. So typically what I would expect, you can see in 2018, in this example, the company was then doing 10 million versus in 2019, 16 million. So you would expect that the cost to generate 16 million would be more than the cost to generate $10 million. So you really want to take a look at these, make sure you understand what your gross profit margins are, which is really just your sales, subtracting out your cost of sales. That's how you get your gross profit margin. And by dividing that by your sales, that's how you get the percentage. And then below that, typically is what we call our fixed costs. These are things like our rent. We're going to have rent regardless. We're going to have telephone, office. I'm not going to go through all of these, but these are fixed costs that typically does not fluctuate necessarily with sales. But of course, if I'm not generating enough profits to cover my G&A, I may have to take a closer look at this and make some cuts. So this is just a nice example of what the financial statements look like and what you can expect if you engage our firm to pull together the financial statements on your behalf. Next slide. With that, that was just a quick scenario of, best accounting practices, what the financial statements would look like. If you engaged our organization to help you with that, what you can expect. And with that, I'd like to turn it over to our partner, Lily, who will talk about the actual filing and what we need to get your tax returns done. Thank you.
Thank you, Michelle. Good afternoon, everyone. Thanks for having us here. Just wanted to start off by giving you a quick introduction. As Michelle said, I'm the audit partner at Ringold. My whole entire career, I've done audits and taxes, so I am really familiar with individual taxes, corporate taxes, and in my career, I have helped individuals and corporations analyze their tax returns and tax position and help them save some money as far as paying taxes are concerned. And then on the other side, I also have been familiar with audits, and those are the two things that are my areas of expertise. So without further ado, we will jump into tax stuff. So the most common question people wonder is which form do I file for my taxes? Now you've incorporated and you need to file your taxes. A lot of people don't know what form to file for their type of organization. So that's where a CPA also comes in handy, is because we can guide you on which form to file. If you're an individual, and I'm sure a lot of you have been filing your taxes for many years, then you need to file a 1040. If you are an LLC, there's a 1065 form that you need to file for the federal government. That's assuming that you have more than one partner in the business. However, if you are a single member LLC, you are considered a disregarded entity. And what that means is that you can file your business income and expenses on your 1040 on your Schedule C. If you are an S Corp, you have the 1120S. Oh, but let me backtrack a little. So the due dates for your 1040, as everyone knows, is April 15th, and you can file for an automatic extension, which takes you to October 15th. For an LLC, that is due March 15th. There's also an option to file for an extension, which will take you through December 15th. However, one thing I do want to stress is that if you need to make any estimated payments, if you anticipate owing the government some money for your 1040, you have to pay your taxes by April 15th. You have to make an estimated payment by April 15th. Filing for an extension only gives you the option to extend the filing of the forms, not your payment. The LLCs and the S Corps are pass-through entities, which means that your income income and losses get carried forward to your personal return, your 1040. So even though your LLC or your S Corp may not owe the federal government money, there is a possibility that they would owe tax to the state of Illinois. And that needs to be paid by the due date, not the date of the extension. So the S Corp is another form of corporation. Your taxes are due by March 15th. Also have an extension option, which will take you through September 15th. And then all the other corporations, the C Corps, the professional, the PAs, the professional associations, and PCs, professional corporations, you'll see a lot of doctor types or PCs. Those tax returns you would file on Form 1120, and those are also due by April 15th. And there's also an option for an extension for those. Next slide, please. So very important, before you start to before you bring your information over to your CPA, there's information that you should really have on hand and bring to your CPA, because if you don't have correct information on your taxes, they will be kicked back and perhaps be counted as late, which could result in penalties and interest. So it's very important to have the correct EIN number, which is your employer ID number. If you don't have that accurately, your tax return will not be accepted. It will be kicked back. When you bring your information to us, let us know which states your company does business in, and also the ID numbers for those states, because we're going to have to file state tax returns in all the states that you do business. We would also like a copy of your articles of incorporation, because that tells us accurately what kind of entity you are, whether you're LLC, whether you are an S Corp, C Corp, and because of that, we can file the right forms for you. And there is an extra step that you have to take to get an S Corp election. That is file the form 2553. We would also like a copy of that. Copy of your prior year, last year's federal and tax returns, federal and state tax returns, because we do a comparative from last year to this year. Typically, individual returns or even corporate returns, everything is pretty similar. There's either a slight upward or downward trend in either way. But if there's a mistake that you haven't caught before you bring your information to us, if we see a huge jump in income or some expense from one year to the other, or a huge decline, we'll ask you about it, saying, hey, we've noticed this big fluctuation. Is there a reason for that? Yeah, there could be a reason, as in maybe you had this new customer and your revenue went up 25%, or conversely, you lost a client or a customer and your revenues went down. So it's very important for us to compare your prior year returns to your current year returns. We would also like dates and amounts of any estimated payments you made. That would apply to corporations, C Corps, and also your 1040s. Information on each individual or entity owning 20% or more of your corporate stock. All forms, for example, a 1099-B, 1099 div, anything you get from banks or your brokerage companies that show how much interest, dividends, or capital gains you have from any of your investment accounts, your bank accounts. Perhaps you got a 1099 miscellaneous for maybe a side business that you did. Maybe you drove an Uber for a few months. They will typically send you another 1099. Copies of K-1s, which you received from other entities that you may have invested in. And if you're a business, we would like a copy of your trial balance, profit and loss, and balance sheet. A trial balance is a listing of all your accounts along with the balances they have at year end. Let's see. If you are an entity with a gross income of less than 250,000, you are not really required to complete a balance sheet on your taxes. So in that case, just a P&L will suffice. Also a copy of any 1099s, like I mentioned earlier, copies of W-2s and W-3s. So if you're an individual, you would of course get W-2s from employers. If you are an employer, we would like to see a copy of your W-3 because that way we can reconcile what you paid your employees and how much taxes were taken out, so we can accurately account for that on your taxes. If you have fixed assets, like Michelle mentioned, building, vehicle, office equipment, we would like to see a listing of that so we can account for those on your tax return. Either you get to write off for a portion of it, or if there's some sort of special provision, we can write off a larger amount of your fixed assets on your taxes. So it's very important for us to have a copy of your depreciation and fixed asset schedules. Next slide, please. So the document before showed items that mostly that you need for your business, and this slide will go into what we need for a Schedule C and also an individual tax return, your 1040. So it's important to have your name appear exactly as it does on your Social Security card. If it does not, then your tax return gets kicked back and there could be delays. Date of birth, Social Security number, of course, home address, copies of your prior year tax for federal and state, obviously for the reason we like to compare from year to year. There have been instances where people have forgotten to give us, say, a copy of their broker statement from JP Morgan Chase, and we'll look at last year and say, oh, hey, last year you had a copy of a 1099 from JP Morgan. Do you have that this year or don't you? And most times people say, oh yeah, I do, I just forgot to bring it. So we do a comparison, a thorough comparison from your prior year returns information to what you've given us this year. If you're getting a refund, and actually even if you owe and you want the money directly taken out of your bank account, we need your bank account information, the routing number and the bank account number, so you can get your money directly deposited to your bank account. And that saves time because it's been noted that people who get money back, the money comes to your bank account a lot quicker than if the IRS has to send you a check by mail. And a lot of people have concerns like, hey, is it safe? Is the government going to take money out of my account? It is perfectly safe. I've been doing this for so many years, and people have had money deposited into their bank accounts year after year. I have never heard of an instance where the government arbitrarily takes money out of your account. So it's perfectly safe to give the IRS your bank account number. Dates of birth and names of all your children and dependents. You could have a parent who is part of your dependents, parent, a sibling, or whomever. As long as you're providing over 50% support for a family member, they can be considered a dependent. Copies of your W-2 from your employer. You may have one or two or how many ever. We need a copy of all those. Copies of 1099-G, which is what you received in a state refund last year. I've noticed that the state of Illinois has stopped sending out 1099-Gs for refunds, but if you get unemployment income, you will definitely get a 1099-G. Unemployment income is considered taxable income, so that's very important to keep that form on hand. And of course, anything you get from banks, which is your 1099 interest statement, dividend statements, 1099-B, which you'd get from your brokerage, showing any capital gains or losses, and of course, interest and dividends from a brokerage house as well. If you're retired, you'll get a 1099-R from any pensions that you may have, an SSA 1099 for for your Social Security benefits. You need those as well. If you'll get a 1099-S for the sale of your primary home or perhaps another property. We need to see those. Typically, if you are a single tax filer and you have less than $250,000 in the gain of your home, it's non-taxable. It's $500,000 if you're married. So for example, you bought your house for $100,000 and you did nothing to it. You did no fixing up or anything. A few years later, you sell your house for $400,000. Part of that $300,000 is going to be taxed as capital gains, but usually, there's very few people I've seen that's actually had to pay capital gains on their residences, especially in our area. But if you're in some area like California, of course, property values have gone crazy over there. 1099 miscellaneous for any income that you may have received from a rental property, distributions from an HSA account, and also K1s from other entities that you may have invested in. Alimony paid is tax deductible. Alimony received is a taxable event. These are the items you need to file an individual tax return, which also includes Schedule C. Next slide, please. So these, we're going to go into more of the information needed for the tax return for 1040 and Schedule C. Income from gambling winnings, jury duty pay, cancellation of debt. These are all taxable events. You'll get a 1098-E if you have a student loan interest deduction. If you have any records of contributions at an IRA, SEP, or any other self-employment retirement plan, we need information for those. For teachers, you are able to deduct a certain amount of, I believe it's $250 of expenses paid for your classroom supplies. Could be, pens, pencils, books, whatever that you use in your classroom. If you're a self-employed person, we would need premiums paid for the self-employment health insurance. There is a provision available where you can deduct part or all of your health insurance. Any other 1099 showing your income as an independent contractor. And if you run, if you are a sole proprietor or if you are a single member LLC, as I mentioned before, your income and expenses all go on your Schedule C. So for that, we need a total of your business income and your expenses. And it's very, very important to have your expenses listed by various categories, like, for example, travel, supplies, contractor expense, perhaps payroll taxes. Those need to be separated by category. If you have a home office, there's also a provision where you can deduct part of your home office on your taxes. It has to be a dedicated room. It can't be like a corner of your dining room and you're calling that your office. It's got to be a dedicated room that's used exclusively for work. Records of business assets, like we talked about earlier for your fixed assets, the date purchased, the cost purchased, et cetera, et cetera. If you drive for your job, you are required to have a logbook really that will document your mileage, how much you drove, the purpose of your trip. Part of that is also deductible. If you had any out-of-pocket doctor expenses, now that is only deductible to the extent of 7.5% of your adjusted gross income. So for example, if your adjusted gross income is 100,000, so 7.5% of that is 7,500, and you had $10,000 in medical expenses, only 2,500 would actually be able to be deducted. If you have premiums paid for long-term care insurance, that is deducted under medical expenses. And of course, on your Schedule A, you can deduct your home mortgage interest, any mortgage insurance premiums, or points you paid on your property. Property taxes, sales, state and local taxes. The real estate taxes and your state and local income taxes combined, they're only deducted up to $10,000. If you had charitable donations, cash or non-cash, please have a record of those, and any estimated payments you made to the IRS or even the state of Illinois or any other state during the year towards an estimated tax liability. Next slide, please. So that concludes our presentation. Thank you for attending. Now we will open up the floor for any questions and answers. I don't know, are there any questions in the chat?
There aren't right now, but folks, feel free. We have a few minutes left, so feel free to go ahead and place a question in the chat if you have one. I'll go ahead and share the contact information one more time. And while we're doing that, thank you again to the Ringold team. You all have shared some super valuable information and made some really good points about working with a reputable accounting firm. I've been working with small businesses for a number of years now, and I can't tell you the horror stories I've had where folks are trying to get loans or they're trying to apply for a grant. And when I ask them, when I'm helping them, I ask them for certain documents or certain information. They don't have that readily available, and it ends up, stalling a project, or they've purchased a property. They can't get renovated now because they don't have the proper documentation to secure financing. So, making that investment into your business is super important, especially when, if you can work with a firm like Ringold Financial. So this is the QR code here. And just a quick reminder, you can apply to be considered to be a participant in this program, and up to 35 applicants will be selected. And you can either have your business tax return prepared, or you can opt in for financial statements and tax returns and your tax return. Important to note that this program is made possible through generous support from Cook County and the American Rescue Plan Act. Cook County has been a tremendous supporter of the South Suburbs and the work that we're doing at Southland Development Authority. And it has been an extreme pleasure working with the Ringold team on other things that we have going on because of, the Cook County Small Business Source program that we have. And from firsthand experience, it's been great working with them. So if we're happy, the county's happy. I'm pretty sure you all will definitely be happy too. I don't see any questions in the chat, but please feel free to share this information with any other small business owners that that are interested in applying for this program. We'll have additional programs coming out throughout the year that'll be tackling tough subjects like financial planning, marketing, all kinds of different things related to helping you grow your small business, especially in the Southland and the South Suburbs. With that, I'll open it up to anyone from Michelle's team or Maricela for any closing thoughts or anything that you'd like to leave us with.
Thank you, Manny. I just want to say thank you to the Ringold team. And again, if you guys have any questions and need help with the application process or anything else, please feel free to reach out to me directly. My direct line is on the screen and also my email. Thank you.
And I'd like to thank SDA for making this possible, as well as the participants. And just really urge you to move quickly on this, because this is really, truly a valuable service. And if you have questions, again, we went over some of the most common documents, but if you have a unique situation and you want to just, ask a question, you can certainly reach out to us or reach out to SDA and they can give you our contact information. So I don't think we have any questions. So either we were very boring or we did just a really good job. But in any case, we look forward to working with each of you guys that are interested in the program. Thank you.
Thank you for that, Michelle. And thank you everyone for joining us. If you, again, know any other entrepreneurs that could take advantage of this opportunity, please refer them as well. We will be having a webinar in Spanish also. So if any folks know entrepreneurs that are more comfortable receiving the information in Spanish, please get them in contact with Maricela as soon as possible so we can get them registered for that webinar that's coming up. All right, thank you everyone and have a great day. We hope to see your applications coming in soon.
Thank you.
Take care. Thank you.